believe a word that Powell or Yellen yells out is by their deeds you shall know them. So let's go back to 2021 as inflation is skyrocketing, and they come out with all the arrogance that, no, this isn't inflation, it's only temporary.
Right.
And as inflation keeps going and going, well, no, it's not temporary, but it's transitory. And not only in the United States, over there in the EU as well, with Lagarde saying this isn't real, it's going to go away. So what they've raised rates compared to inflation, and then when you look at John Williams' shadow stats, the inflation number is actually double this, not 7%, but more like 15%. Because they take out things, the home prices, they went up 40% over 2 years. No, we're going to put them in there. No, we're going to make up a new thing. We put rentals in there and other things. Oh, and you're not eating steak anymore, so that didn't go up. You're eating chopped meat. So the numbers are rigged. So going back to what are they going to do? And you can't believe anything that they're saying, as I see it, because of the lies or ignorance that they've said before. Number two, they're not blaming. They're coming out and saying that inflation is caused by the supply chain disruptions. And you know what else? Rising wages. So now what we're going to do is slow down the economy so wages go down. From Wall Street Journal, January 7th. Dow jumps 700 points on signs of moderating wage gains. Quote, investors are celebrating the fact that the average hourly earnings number was less than expected, says Michael Arone, chief investment strategist of State Street Global Advisors. Quote, there was fear going in that wage inflation would remain high. The United States government dumping in over $6 trillion of fake money to artificially prop up the economy during the COVID war, bringing the interest rates down to nothing. So you had the housing boom and merger and acquisition activity in 2021 hit an all-time high. So going back to where it's going, it depends on what they do with interest rates. If they raise interest rates 50 basis points on February 1st, the markets are going to go down really big and hard. That's the way I forecast it. Long term, before the 2024 elections, they're going to lower interest rates. They do it all the time for the party in power. Again, we're forecasting a market meltdown if they continue to do what they're saying they're going to do.
Right.
We can't predict what they're going to do. For example, in 2012, I thought the markets were going to crash. They didn't teach me about zero interest rate policy and a thing called quantitative easing in Economics 101 or graduate school. They'll make up anything. So we don't know what they're going to make up. If they stay the course to what they're saying, then we see a market meltdown. But even overall, if they raise interest rates only 25 basis points, it's still going to have a lot of negative effect on the rest of the economy. The markets will do okay, but the rest of the economy won't. Again, you're looking at the headlines over how happy they are that the people are earning less wages.
So let's hear what your outlook is then for the global economy for 2023.
It's down. I mean, you're looking at the emerging markets. They're submerging really deeply. They have all this debt, a lot of it's dollar-based, and the dollar's still much stronger than it was before, and they're going to go down really hard. Again, the damage done by the COVID war is incalculable. Look, one of our top trends is office building bust. You're looking at office occupancy rate, and you could go to the data, look it up, Castle, any of them. At best, it's 50% of what it was before the COVID war when it launched in China on Chinese Lunar New Year 2020, the year of the rat. All the businesses that depended on commuters, they're going out of business. All of the office space, the occupancy rates, they're hitting new highs. So now you are an owner of an office building. I'm not going to take 15 floors anymore, somebody says, because I have people working remote, even though they're only coming in 2 days a week. I'm going to save myself money. And I'm the landlord. I own this building, and I got to pay my mortgage. Oh, and interest rates went up, and you got variable rate mortgage on this? And now you're looking globally. You're looking in Europe at a 46% office occupancy rate. Places like London, 35%. all the businesses that depended on it. I'm telling you, the damage that has been done by the COVID war, not only financially, but spiritually, emotionally, physically. So what we're saying is the economic situation is only artificially being covered up by the markets. When the markets go down, then the rest of the people in the economy know how bad it is. Every week we do a office unemployment numbers, the people leaving jobs. One company after another, firing. Goldman Sachs just fired how many? Amazon just let go of how many? This one let go of how many? When did you ever see this? Day after day after day after day after day. Oh, and then the new numbers came out. Oh, they weren't that bad? Oh yeah, you mean the jobs that the people were taking, the numbers that went up? People were taking second jobs and third jobs that pay very low wages because 63% of Americans are living paycheck to paycheck.
So you're saying that the disconnect between Wall Street and Main Street is even worse than what we think it is?
Absolutely. And when Wall Street goes down, then it becomes the reality. That the reality on the street doesn't count. It's only when Wall Street goes down. Oh, it's like a football player got a heart attack. Well, my mother died of a heart attack. Nobody cared. Oh, but that was a football player. You see what I'm telling you? They ramp it up. They only make important things, what they think is important, to keep the people's mind on. And then what you look at the median household income, what is it, 60-something, $70,000? So you're going to see a big crash, car sales going down, one thing after another. Look at all the stores closing down. It's in front of everybody's eyes. The layoffs, the layoffs, the layoffs, the layoffs. Again, it was artificially propped up by the bankster bandits and the government.
So what is an investor to do? I know you don't give financial advice. How are you positioning yourself, though?
Again, for me, I have real estate and gold. And there are going to still be real estate opportunities. My first buy of gold, by the way, was at $187.50 an ounce back in the late 1970s. That's when I started becoming a trend forecaster. The Iran war was breaking out, the overthrow of the Shah. And again, just like they taught us to hate Russia, they taught us to hate Iran. The average person didn't know about the United States overthrow the democratically elected government of Mossadegh in 1953 because he wanted to nationalize the Iranian oil. And anyway, and the CIA and the MI6 overthrew and Standard Oil and today BP, Anglo-Iranian Oil, took over again. So I said to myself, as everybody's hating all this, what would be the implication? And I started playing the futures markets, and I started betting on gold and oil futures because I knew this thing was going to happen, and they weren't going to defeat the people taking to the streets because millions and millions were taking to the streets. And that's how I became a trend forecaster. I started looking at things for the way they are, not the way I wanted them to be or what the government told me they were. And I feel the same thing right now, that we're in that same position, gold and oil, because there's war breaking out. This is a real war. It's not a proxy war, by the way. America is at